So first thing, I just want you guys all to focus on my screen. What is online trading? Okay, so online trading, which is CFD, basically contract for differences. That's the whole definition. The term CFD means contract for difference. It's a trading is a way to speculate on the price movements of financial markets without owning the actual asset. What do you mean by that? Actual asset, you're not holding any currency, so basically you're not buying anything physically, any gold, currency, stock. You just trading on the price movement, which is basically also the price difference of that stock, commodity, currency, whatever it is. Okay, so no physical owning, you just trading on the price movement. Does that make sense? So moving on, what are the benefits of online trading? Now this is a very valuable question. A lot of people think like, why don't I just go to a shop and buy the currency? I'll give my Indian rupees and buy some dollars or buy some pounds. That's easier because it's in my pocket. So why do I go for online trading? So if you once again pay attention here on the screen, there are benefits, which are number one, leverage. Trade large positions with a small amount of capital, increasing potential returns, but also there is risk involved. Now leverage is something that even with a very small capital you can take the bigger trades. Why? Because the broker you are using, he is giving you leverage in form of, for example, 9x markets provide leverage on gold and other assets up to 400. So basically, even if you have less amount of money, you can still use that 400 leverage to open the bigger position. So this is one of the best benefits you will have. Secondly, flexibility. So you can go long or you can go short. So you can either buy or sell. In physical market, if you buy something, you only pray that the price goes up, then only you making profit. But when it comes to online trading, even if something is going down and you sell it, you can still make potential profits on that. Okay, and the best one is wide range of assets. You have forex, you have gold, which is a metal commodity, oil, stocks, indices, even cryptos. You have all in one platform. So this is one of the beauty, that you don't have to go different places to buy these separately. Everything is there on one single platform. So why traders choose online trading? This is one of the main question, So high liquidity means trillions of dollars traded daily, easy to enter and exit trades quickly. I'm sure majority of you guys are already trading, so you know what this point means. To move the market, what we need the most, it's the liquidity. Liquidity means how many people are there who are buying and selling this instrument or this product. If I take an example of gold, if a lot of people buying and selling gold online, that means there is high liquidity, and that means you will have so many opportunities to buy and sell and make potential profit with the correct risk management. So high liquidity is there. 24/5 market, Monday to Friday market is accessible. You can trade anytime you want. Low cost, so low spreads and often no commission, depending on the broker as well. So majority of you guys who are already with 9x market, you know that our spreads are really low and we don't charge any brokerage, any other kind of commission as well. So this is one of the best things, to choose the best broker where you are not paying any extra fee. Leverage, which I just explained you in the previous slide, that what this means, what this does. It also gives you higher chances of higher profits, but also on the other side, if thing goes against you, you can lose your money as well. So you need to be very careful with the leverage. And then the access of global market like US, EU, UK, Japan, and so many of it. So basically this is what you get in the CFD online trading market. So much exposure and so many different global markets you can trade at the same time. So now coming back to what 9x actually offers. So you can see on my screen here, stocks, commodities, currencies, cryptos, futures. These are all the assets, instruments, product, whatever you want to say, that we are offering to our clients. Okay, so if you are trading in one of these, this is the best place for you, because you are getting the right support, right guidance, and then all the stocks, commodities, currencies, everything is in just one platform. So let's skip the poll question, because I want to go and explain you the main concept and I need time for that. So the difference between the buying physical asset versus CFD. So this is the second part of today's topic. A lot of people think like, and this is why we kept the example of gold, because a lot of you guys understand what is gold, what is the benefit of gold, what actually gold does, to your investments. So that's why we kept the example of gold. And a lot of people think like buying physical gold in form of jewelry, in form of the those bullion bars, so many things. If you have it like this is a strong investment, and online trading on gold makes zero sense. But let's compare side by side, what are the benefits, what are the advantages. So we will take two scenarios. In scenario one, we will talk about physical gold. Now I want you guys to pay attention on my screen so you can see what I actually mean. So let's just say there is one guy who's looking to invest, and he is going to a shop to buy physical gold. So let's just say the price of that gold is $3,400. Okay, so that means this guy needs to pay the full amount in order to get that much amount of gold. So let's just say 10 gram of gold costing you 3,400. So that means he needs to pay the full $3,400 so that he will get 10 gram of gold. And the second thing will come up is that he is owning the real gold. Now the thing is, he paid the money to the guy in the shop, and now he owns the real gold. You keep it at home or in the safe. Now either you put it at home, or you can keep it in the safe, locker, bank, whatever you like. Okay, if the price goes up, you sell it for profit. Okay, so if for example now this price after 6 months from 3,400 goes to 4,000, let's take a real example. Right now gold is around 5,000 something. So from this price, let's just say whoever bought it is already $1,600 in profit, correct? But when it comes to buy and selling, it takes time. Why? Because now if the same guy wants to sell it, he needs to go to the jewelry shop again. He needs to see which shop, jewelry shop is giving the best rate, so that he can go there and sell his gold jewelry or gold bar. Same thing with buying as well. You have to visit so many different jewelry shop to see who's giving you the best price. So point is, it's time consuming. Okay, now coming to the second point, trading as CFD, which basically you do it through the broker with 9x market. So let's just say there is another guy who also wants to invest, but now for the same amount of that 10 gram gold, for example, you only pay a small part. So you don't need to have this whole figure. Even with just $700 of deposit in the account, this guy can open the same worth of position with only $700. And why is it possible? If we go back 10 minutes back, I explained you the leverage, because this guy is getting 400 times of leverage from his broker. So that's why he doesn't need to have the full amount. Even with a small amount, he can trade, or he can use the leverage and trade the same amount of gold, worth of gold, with only $700. The best thing is you don't own any real gold. So if you don't own any real gold, no stress of keeping it safe, keeping it at home or anywhere else. You just trading on the price movement, which I explained you while I was explaining the CFD definition. You just trade purely on the price movement. Price goes up or down, you are just trading on price movement. So your profit and loss based on that. It can make money if price goes up or down. The best part is, like, even if gold is dropping and you put a sell position on, you can still make money. Not like here, that if gold start going down from this point, that means you are now starting to lose the money. But here, up or down, you can take the position and make the potential profit. Fast and easy to trade online. We all know that you just open and close from your MT5, from your 9x. You just place the buy button, the trade is open, you press the close button, trade is closed. Sweet and simple. No hassle like going to the jewelry shop, going to the 10 different ones, seeing where you're getting the best price. So that's why CFD gold is, I'm not saying now the physical one is bad as well. For some people, physical gold makes more sense. But also if you look at the, amount of money you spending versus amount of money you spending on the physical one, there is a big difference. So both of them are correct investments, but we are just talking about the difference between both. Here you can have small capital and you can trade same worth of gold here. Does that make sense? So this is what the basic difference between physical assets, buying the physical asset, and the CFD. Any questions so far, anyone? If there is no question, I will go ahead. If you have any question, put it on the chat box. I'll give 1 minute to you guys before we go ahead. If I don't see any questions, that means we are all good and fine. I think we are good. Everyone understood. I don't see any question. That's a good part. So move on to the next slide. So now it comes to margin and leverage. I will explain you this again. Leverage I have already explained, but now let me explain you properly with margin as well. So now I want you guys to do is pay attention on the screen. So what is leverage? Leverage allows you to control a large trade size with a small amount of money, which I explained you in the definition of leverage, which I explained you in the previous example, where you doing CFD trading on gold, because you have very less amount of money you are investing, but because your leverage is high, you can take bigger position. And there is an example you can see as well. For example, the broker you are using is giving you leverage of 100, which means you can trade $10,000 with just $100 you need to trade up to this much amount. Look at this, you see. But physically, if you're going to buy gold of this much amount, you need full $10,000. But here, because your leverage was 100, you only needed $100 and you would be sorted, because your broker is providing you the leverage. Understand? And now when it comes to the margin is the amount of money you need to open a position. It's a percentage of the full trade size. So basically you should have enough margin that you can open the position. Sometimes you have multiple positions open and you don't have enough margin to open another one. What do I mean by this? Just look at this example. So let's just say your trade size is $10,000 and your leverage is 100 in this scenario which we just checked, and your margin required will be based on how much amount of trade size you're taking divided by the leverage your broker is giving you. So the margin required is $100. That means always if you want to open up to this much size of a trade, you should have $100 amount of free margin in your MT5 account, so that you can open another position. So with just $100 you can open a trade worth of $10,000. You see what is the biggest difference here, that $10,000 worth of a trade can be open only with just $100. And the simple rule is higher the leverage is equal to the small margin required. The higher your leverage you will get from your broker, the less capital you required by yourself to trade in the market. But it also means higher risk, because even small price movement can lead into big gain or losses. Of course, market is volatile. Even if there are slight drop or a upside movement and it goes against you, you can lose the money quickly as well. The same way you can gain the money. Okay, so you need to be very careful with the leverage, because the higher the leverage, higher the risk and reward. Make sense? Okay, moving on. And some of the most important key trading terms we will talk about, which is a pip. So what is a pip? A lot of people don't understand still. They trade and doing everything fine, but still don't know what is pip. So this smallest price move in the forex pair is called a pip. For example, if this is your USD and you'll see the price is showing 1.1000. As soon as this 000 move to 001, this is a movement of 1 pip. So I can say like the market moved 1 pip. So this is the definition of pip. Okay, spread. The difference between the buy, which is ask, and the sell bid price. This is usually the broker's fee. You always see that the buying price is different and selling price is different. And if you do the calculation between whatever is the margin is basically the broker's fee. When you open a position, that fee goes to the broker. Okay. And always you will see the price slightly be different, but it cannot be a big gap, because if the spreads are quite wide, it's not very good for the clients who are trading with that spread. Okay, stop losses is a kind of a risk management tool where you can set I'm sure majority of you guys are using TP and SL, which is very common. So basically stop loss is something where you can set your risk that you do not want to lose more than this. So you on a level on the chart put your stop loss and you are good. So even worst case scenario, if things does go against you, you still not losing your whole capital. And vice versa with the take profit, you set a level where once your trade reaches, it will automatically close. So even if you are sleeping and the market reaches to the level where you were expecting, and because you are sleeping you cannot close it, you have a TP set, the trade will automatically be closed. So very sweet, very simple. And now it comes to the live platform, which is 9x markets and MT5. I will explain you in a bit the platform as well. But before that, I will talk about little bit of the trading strategies as well, that how many strategies are there, how you can take advantage of this. So one of the strategies which are very common is trend following. Trade in the direction of the overall market trend. Every time is one of the best things to do. Whatever is the trend, go with the trend, because trend is your friend. Always make sure that whatever you're seeing on your screen, majority of the world is going with that flow. So if you go against the trend, the chances are that you will most likely to lose the money, which is higher, okay, because you're going against the trend. And secondly is use tools like moving averages, trend lines. These are very important in from a point of view of technical analysis. I'm sure you guys a lot of times see that technical analysis means like people drawing lines on the charts and some indicators they are putting on. What exactly all this? Basically these are the areas which they highlight from where the price reversal or breakout might happen. So that's why it's very important to always use these tools. And the goal is to ride the trend as long as possible. The longer you will ride the trend, the more profits with the correct risk management you will see. Then it comes to the news trading, which is happening right now in the world with gold and other stocks and crypto. Trade based on economic news releases like NFP, CPIs, or any pandemic happens, or let's just say any tweet from Donald Trump. These kind of these kind of impact can change the whole market, because one news and everything can be changed. Any winning position you see running in profit suddenly will go in loss. Why? Because there is a news came out, or there is a tweet came, or any war happened. Anything can happen. This is purely the news trading, okay, which is also as I told you, interest rate decision, inflation report. High impact news can also cause big price move, okay, so and requires quick reaction and good risk control. So at the time of news, market goes really crazy, things go really highly volatile. So you need to always make sure that you are risking and using the correct stop loss, correct risk management tools. You're not risking enough. Third one we will call as scalping. A lot of traders love this one because make many small trades in a short time, in a very short period of time, on a lower time frame. You are opening position and closing within minutes or within second, and it makes you good profit from minor price change. It requires fast execution and low spread broker. But this strategy only work if your broker like 9x market giving you low spread. If your spread is 50, you cannot do scalping, because by the time you will fill your spread, you will see that already market is gone quite on a different route. So this is very important for the execution and spread point of view, that your spread should be always lower, okay. Moving on to the next one, risk and reward ratio. Always take a position where you will see risk reward of 1 to 3, okay, because 1 to 3 risk reward is a good trade where you are risking only $100 to make 300. So for example, if you win, you will make $300, but if you lose, you are just losing $100. This is a good risk management and risk and reward ratio, okay, not like the opposite, that your risk is 300 and the reward is only $100. In these scenarios, you're risking $300 to make 100. This makes no sense. This is a bad risk reward management. So try to avoid it, and always do 1 to 2 or 1 to 3, which is even 1 to 1 is not bad. So good risk reward strategy is only take trades where potential reward is greater than the risk, which I just explained you, either 1 to 2 or 1 to 3 ratio. Even if you win just 40% of the time, you can still be profitable. So as I said, like even 40% of the time you are going in the right direction, and 60% of the time you are losing on your trades, it hitting your stop loss, you will still be 40% profitable at that time. If you want, you can try it on your demo accounts or real accounts. It's completely your choice, but try and do it and you will see the big difference. Even out of 10, 6 are losses and 4 are the winning trades which hit your TP, but with the correct risk reward ratio, you will see yourself profitable. Okay, so moving on, So why summary with 9x MT5 with 9x market? MT5, I'm sure all of you guys know, it's a very known global app where a lot of people are using it. We have our own 9x market platform as well, where you can trade, but this is fast and reliable in trade execution. Wide range of instruments, you can find it here. Powerful tools and indicators are there, and you have a desktop version, mobile version, and web version, which I'm sure a lot of you guys are already using it, and it's ideal for both beginner and experienced trader. Even if you are a first timer, even if you are like 5 years, 10 years of experience, it's very easy to use and to trade in the markets. Okay, so why we should go for 9x market? Because now the main question will be, every broker is doing the same thing, everybody's saying the same thing, that we do this, the spread is this, the swap is that, but why 9x market? What's so different? So it's a trusted global broker. First of all, we are regulated, and regulation is one of the most important thing to see while you choosing a broker. So we are a regulated broker with a strong industry presence. Our license is on our website. You can check what licenses we hold for your own knowledge. Then the tighter spreads and low trading cost. As I explained, the spreads are quite low if you compare it to the other places. Then fast execution on MT5 as well, that the execution you will see, it's instant, it's fast, and it's quite of easier for you to place trades within milliseconds. Wide range of instruments, once again we discussed this, that the variety we have here is forex, gold, indices, commodities, CFDs, everything in just one platform. Multi-platform access, you can use it from your phone, mobile, desktop, and even your web trader. And the support and education is the cherry on top. The education you receive here is not like that we'll give you an account, you deposit your money in that, and now you're trading. We give you the analysis reports. We also provide you the help in case you are stuck somewhere or anything you don't understand. Like the webinar we are doing right now, we are just giving you the free information. So we also do one-to-one sessions as well, where if you are struggling, you are not understanding anything, we are more than happy to help you, to explain you how that concept works and how we can improve your knowledge about the markets. And when it comes to deposit and withdrawals, it's very simple. You will see always when you log in into your portal these three methods: from your credit, debit, your crypto, and from your wire transfer, bank transfer. For Indian clients, it's UPI as well. And same thing with the withdrawal. Majority of you guys are using us already now for a long time. Those who are seeing it first time, this is very simple. You choose any option you like, put your details, and your withdrawal will be processed. Same thing with the deposit, your deposit will be inserted. So that's pretty much it for today. Any questions from you guys side? Anything you guys want me to cover again, or anything you did not understand, please let me know so I can help you guys. Anything, you raise your hand or write it on the chat box, and I'm more than happy to answer. If nothing we have, then we can wrap up the session, but would love to know what you guys think. If something useful you guys understood today, please give me a thumbs up so I know you guys are actually learned something new. I can see some thumbs up. That's good. Anyone else, any questions? Thank you guys, I can see thumbs up. Thank you so much. Anything from the audience? If nothing is still something is not clear, anything you want me to go again, but if you guys are all good and happy, we can wrap up the session. I'll give you guys 2 minutes while I just take a break, relax, and then you guys let me know. I think I'm just getting so many thumbs up, that means everything is good, you guys understood. I think you guys just make sure that the broker you are using is spread basically giving you really good, because spread is the main thing where everything changes. If the spread is high, it will be very difficult to trade, but if the spread is lower, it will work in your favor. So one of the advice is, if you ask me, always choose a broker like like 9x market, where the leverage is quite decent and the spreads are quite tight. That will definitely help you. Okay, So I believe no other questions I can see on my screen from any of my attendees today. So with that, we will wrap up the session. I would like to say thank you to all of you guys who came today and attended this session. And I hope you guys do really well in the market. If you still have any issues, any difficulties, or anything you're not understanding, please feel free to reach out the 9x Market team and we will help you. Okay. So for today, thank you.